shorts of FIs have gone up from 5,000 crores on Wednesday to 2.97 lakh crores on Thursday.
Yeah,
but it's a hedge. It's the only way to play such a big event, and I'm assuming a whole lot of the global funds have IPSs, which is their investment policy statement, that insist, and as part of strategy, ahead of any big event or a geopolitical risk, you have no choice but to go in hedged.
Yeah.
So, agreed that it is part of strategy. It's not necessarily their view that is changing. So a couple of factors, I suppose, has created the perfect storm in the last couple of days. The expiry, Bank Nifty and Nifty, would have, increased sort of blood pressures, and the exit polls coming up. But, before we get to the cues of the day, guys, anyone fascinated by the Trump story?
Who isn't?
And what's going on there, and the fact that he will be the first former US president actually convicted of bribery and hush money, and it's going to make zero difference to his supporters and to his chances of possibly becoming the next president of the US again.
Yeah. Just an update for people who might be interested. And there's so many questions online about whether he can still run for being a president. Yes, he can. I think
he can.
The US Constitution allows that.
So the reason that he can is because first, he'll appeal. Second, even when he's sentenced, which is possibly in July, it's unlikely that he'll be put behind bars so he can physically campaign, etc. And then the appeal process will go on for a while. It's not like it happens only in India. It's all over the world.
Yeah.
The judicial and appeals process is long. And his party will not have the guts to not give him the ticket if his popularity doesn't dip, and the polls don't show any impact so far.
Yeah, thus far, no. And the eligibility is very clear. I was reading in one of the things that must be at least 35, must be natural born US citizen, have lived in the US for 14 years. No rules blocking candidates with criminal records.
Yeah. So you could be a felon and you could still be fine. So that's the Trump story this morning. But global cues, look a bit, I would say, not too positive. That's one concern. And let's just start with what's been happening overnight. I'm not sure it's going to impact in Indian markets entirely. Perhaps not, because we've been marching to our own beat. But if that's the backdrop, definitely not great. Over 300 points down on the Dow. Once again, Salesforce in part responsible for that, because remember how we told you that their numbers, which came after trade closed yesterday in the US, were dismal in the sense they missed guidance for the first time since 2006. The stock got hit fairly badly, so the Dow was down, but across the board as well. A sense that, you just can't bet on one NVIDIA and one AI theme to chug along beyond a point. And is that sort of push masking a wider slowdown in the kind of bull run that you're seeing? So, I mean, that's the story of the day in the sense as far as the US markets is concerned. The bond yields, though, did slip a bit. I mean, they're positive, actually. It's slide below 4.5% for the US 10-year ahead of that very crucial data. Personal consumption expenditure data comes out on Friday in the US. Everyone wants to watch it very, very closely and see what it says. Jobless data came in as well for the week, and slightly higher than estimates, so at 2.19 lakhs. As far as crude is concerned, again, another slide. Demand concerns actually growing, and this is a long-term story which is now not just for a few seasons at all. Is it the move to electrification? Is it that the US has become a huge exporter of gasoline, and which is why, despite production cuts, etc., you're not seeing crude prices bounce back really. Brent below 81, below 82 actually, and slightly above $81 a barrel. Asia has opened well, has opened up in the green and continues to be up in the green. So a slew of data coming in there across various regions, and overall you have a positive take in as far as Asia is concerned. I pull up the implied open for India, and you're seeing a green uptick after a while on the Nifty implied open. So maybe there is going to be some Friday cheer after all, after being beaten down for the last couple of sessions, one would hope. If that happens, it's not on the back of FIIs buying or anything like that. Just look at the data. coming in from yesterday in terms of fund flows, and you have once again FIIs selling, DIIs buying, just maybe cancelling out each other to that extent, but 3,433 crores of buys from DIIs, 50 crores from FIIs, and we pulled up the figure for the whole month in terms of net outflows. For FIIs, it's 24,000 tops in May. This lovely chart that our producers have put out together tells you what the picture has been in 2024 so far. So March was a big positive. Net, you're still in an outflow mode, but it has been patchy. May has not been a great month, again, like January, and of course we'll add on the figures from today for that final figure. Let's see if that changes post June 4th. So, these are some of the overall cues to watch out.
Another important talking point on Wall Street last night was the US GDP number.
Yes.
That came in lower than expected, so you'd have expected markets to cheer that because that could be an indication of an impending or hope of a rate cut, but that's not exactly what the way things played out.
The bond yields behaving
yes,
themselves.
so 1.3% versus a 1.6% expectation from US GDP. So that data point is what actually dented the sentiment on Wall Street in overnight trade. It also led to gold and silver rallying and the dollar easing off. Usually that's how it behaves typically when you have economic data points. Chinese PMI has come out this morning. That's also not looked very good. So that could potentially impact the way metals may play out. But Chinese manufacturing data reporting is coming slightly lower than what we saw in the previous month. So it's dipped to 49.5 versus 50.4 in the previous month. So that both those economies significantly, or at least data indicating that there is some amount of weakness there. All eyes will remain back home on India's GDP data that's expected later on in the day.
Even Japan, in fact, the inflation just kind of picked up, keeping BOJ on track for the rate hike. So lots happening in Asia for sure. But for India in particular, well, keep in mind, as we discussed at the start of the show, the index futures OI has come off quite materially, and therefore you would suspect, based on the price action that we saw yesterday as well, that a bit of a long unwinding that happened in trade yesterday. But in today's session, the MSCI rebalancing could lead to about $2.5 billion worth of inflows into India in a single day. If that were to happen today itself, then you might actually see a bit of a support coming in on the cash side for the market. And remember, it's also the penultimate day to exit polls. I really doubt too many people will take very large positions. Even the most brave hearts will not take a very large position on trade ahead of the exit poll. So bear that in mind. But cash market buying could actually give a bit of a spur. That's the first part. Two, for both day before yesterday and yesterday, the FI sell number includes very large block deals as well. Yesterday, TPG sold out of RR Kabel, 5%, and some others, like 4 deals happened yesterday as well. So keep that in mind, that some of this FI data is not just nervousness selling, but block deals that have happened too. Nothing takes away the fact that there is selling, just that there is an added layer of block deals that have happened. And when you look at sectors, private banks stood out amazingly well yesterday. Who would have thought that in a day like day yesterday, when the markets came off so materially, private banks would stand up 0.32%, if I'm not wrong. Yes, the Nifty private bank index was up 0.32%, ICICI, HDFC, everybody leading. But it's very difficult to call it a trend because private banks have done that. HDFC Bank contributed the best last Thursday, last Friday, last Monday, or this Monday, and then Tuesday, Wednesday had a bit of a sell-off as well. So very difficult to kind of call this a trend. And again, very difficult to call the weakness in IT a trend. But the only thing that stood out, that if you look at the series, May series, the sector which had the largest short OI build-up was IT. Massive shorts build-up in IT through the series got exacerbated in yesterday's session too, I presume, and which is why you had very few gainers in trade yesterday in IT, in fact no gainers. But the OI short build-up has been very large through the series. I wonder if somebody knows something there, but it'll be interesting to see how IT behaves in June series when there's such large build-up and such large rolls on IT shorts for the June series as well. So certainly a sector to keep in mind.
Just talking about MSCI rebalance, we talked about it a few days ago, I think, and of course we were expecting stocks and you saw those stocks react. But just to highlight for you, there'll be 13 new stocks added. So from your likes of Bosch, Canara Bank, Indus Tower, Jindal Stainless Steel, JSW Energy, Mankind Pharma, NHPC, PB Fintech, Phoenix Mills Solar Industries, amongst others, will of course be beneficiaries of potential inflows coming into them. So you've got to watch out for these ones. Another sector to keep an eye out on will be the auto sector. Auto monthly sales numbers start rolling in tomorrow. So while tomorrow, of course, has significance for more important reasons, but auto sector will be an important talking point today as well, ahead of those numbers that come in tomorrow's trade. Well, apart from that, a quick mention on NSE, which has actually launched a new thematic index, Nifty, EV and New Age Automotive Index. Interesting and worth a mention because this has been such an important conversation that we've had over the last 6 to 8 months. It's a space that has seen inflows and significant inflows at that. With the launch of this, it seems like the exchanges as well are throwing it some focus. And if you're looking at a thematic investment, then this does become a good space to be in. Well, it is pretty much the end of the earnings season. We will take you through a few of the earnings that came out after market close yesterday. Bharat Dynamics is topping my list. Largely, it's been in focus. There was a stock split that happened early last week. The stock has been on a non-stop rally for good enough reason from what we can see. Very similar to what other defense companies have reported. This is no different. Revenues are up 7% to come in at 864 crores from 798. EBITDA is up significantly at 72.5% to report at 316 crores, and net profit has also seen a big jump of 289 crores versus 153. Margins have improved significantly at 37% versus 23%, and the most optimistic expectation on the margin front stood close to 27%, which is Bloomberg's estimates as well. So all in all, a fantastic set of earnings. The stock went home flat yesterday, but if the market supports it, it wouldn't be a surprise if this counter sees another opening rally in today's trade. The 1 month returns are 60%. Of course, the debate could be underway whether there is the value still exists in stocks like these, but for now, good earnings, good order book, margins are healthy, outlook is positive, no stress on execution. All that put together could be responsible for another strong start for Bharat Dynamics.
One space that has been delivering on the expectations of the street, and Bharat Dynamics is as well. Moscow, Cochin, you know, this entire defense space, and I know you've been tracking Bharat Dynamics quite closely, has actually delivered on what it's promised.
Yeah, and it's very similar. I mean, we talked to Moscow yesterday, and if you notice, it was similar. Their revenues were single digit, margins have improved substantially, and profitability has gone up. So while your top line may not look as strong or as impressive as bottom line, and that again has been across the board. So we saw that with HAL, we saw that with Mazgan Docs, where we talked to them yesterday. Of course, they did say that there was, unexpected items, and it was not the core business that had expanded so significantly.
Maybe because the life cycle of orders is also that
long,
large.
Lumpy maybe in nature, but yeah, it's a good set of earnings, and no bets there. It could be a stock to watch for in early trade this morning. Welspun Corp, not sure how we are reading this, but I think most people do believe that it's a good set of earnings from Welspun Corp. Revenues are up nearly 10% at 4,461 crores. Net profit has also seen a big jump. Record profits being reported by the company at 287. They've done a record dividend declared as well. Margins, though, have come in under pressure. Now, we would want to talk to the management and understand what's led to that decline in margin and EBITDA, while revenue and net profit look actually pretty good. But record numbers from the look of it, but there is clearly some margin pressure. Now, this is on back of raw materials, operational inefficiency, expansion plans, interest coverage. We'll try and get a sense of that. But from the face of it, I think the street is giving this one a thumbs up in terms of what's been reported, despite margins that were lower than expected. Another smaller one, but good earnings, is Suntec Realty. Profits have come in at 100 crores versus a loss that the company reported in the same quarter last year to the tune of 28 crores. And margins have also expanded significantly to come in at 36%. So that's, again, a phenomenal number for a real estate company. And you've also seen revenues that have spiked 9 times to 426 versus 48 crores. I have no idea what they've done, but almost 10x increase in revenue in a year is is definitely worth knowing why.
Wow, we should get them on and actually see what's making them tick and what their pre-sales value looks like, which is the big indicator for the real estate space. So yeah, like Samina said, fag end of the results season. So a couple of them on my radar. Apollo Hospitals I wanted to talk about. Those numbers came out, and programming reminder, you will be hearing from the management at 9:45 today. We'll be speaking with Sunita Reddy. So the numbers are in line, and remember Q4 is a traditionally strong quarter for the entire space. The last quarter of the year seasonally is when a lot of people go in for their annual health checkups. When you compare it to Q3, which is your festive season, elective procedures are then pushed forward. So Q4 is seasonally strong. So the numbers which are looking good on the face of it was expected is the point I'm trying to make. So revenues up nearly 15%, EBITDA up 31%, EBITDA margins have gone up a tad for the consolidated piece, about 13% versus 11.3%, and net profits about 77.5%. Now, the healthcare services continue to be the big driver, which is the basic hospital services. Their digital and pharmacy businesses are still some time away from profitability. Remember, they turned EBITDA profit last quarter, which was ahead of their own guidance by a quarter. They were supposed to do it by Q4. But in terms of turning profitable, they're still some time away from there. So the brick and mortar pharmacy is still cash guzzling, but it's tempered out with how healthcare services has done. There's a Morgan Stanley note out this morning, and I'll just take you through that. They've rated it overweight with a target price of 7,181. So that's a pretty good thumbs up. You might see a positive reaction on that stock, which was down about 2.5% yesterday. The target price set by Morgan Stanley sees an upside of 25%. Because they're happy with the revenues, which grew about 13%, led by 16 and 15% year-on-year growth in offline pharmacy and GMV. Their ARPOP also grew about 10 to 12% year-on-year, and their outlook for that is also upped. The occupancy levels also, they hope to get to a 70%. So all of that looks robust. The downside risks they see is slower ramp-up, competition from online players, and skilled doctors' attrition. So Apollo Hospitals one to watch out for, and could have a positive response if the mood continues for the market, which seems like a positive implied open. Now, the other one is Swan Energy, and this is a bit of a complex piece to see from just their quarterly consolidated numbers, because there are so many moving parts. It's a diverse kind of a business. So while revenues are up 49, nearly 50%, EBITDA is down 50%, and net profits are also down. What's caused it is a rise in material expenses, gone up by 72%. Other expenses have also risen 32%. There some inventory item changes in the balance sheet, but what could have worked, or what may work for the stock, is that the company has been going into newer areas. They're entering shipbuilding, they're entering the LNG terminal business. What hasn't worked segment-wise, though, is textiles, revenues down 16%, energy is the big hit, revenue down 67%, and warehousing, revenue down 91%. So mixed bag over there for Swan Energy, and maybe on a relative term, the street might find it a positive set of numbers at the end of it. JFS was the other one, Geo Financial Services. A pretty significant announcement. They've launched their beta version of the Geo Finance app. In a notice to exchanges, the company says that the app is for daily finances and digital banking. So it'll have UPI, loans, the whole shebang, all in one app. And this is the beta version. So an interesting space to watch, I would say, when, Paytm has been at the fore. The entire digital banking space is really where all the action is. But it's a treacherous terrain, I would say, because the regulatory sort of headwind is very, very high. You never know when the RBI, etc., swoops down, and then you hit a road bump.
Yeah, could be interesting though. App launches might be exciting. I was just seeing Swan Energy's margins from 20% in the March quarter, June 30%, September 21%, December 16%, slam dunk to 8% in this quarter. So, that the margin performance is so bad this quarter around. would be an interesting one to monitor, just purely on that. But
so your take is that the street will
punish it. Just looking at how erratic the margins have been and how low they are this time around, could be interesting. But 50% uptick in revenues is also very interesting.
This one will be a bit of an interesting one to watch.
Most
which way
certainly.
it goes.
It should be very, very interesting. Just a couple of other things, not news per se, but con call or brokerage pays. So Amara Raja is one. They did a con call yesterday. Post the con call, of course, JP Morgan came out with a note and said that the target price in the bull case could be 50% higher. But why are they saying this? Is because Amara Raja is talking about the future. They're saying they have started assembling lithium battery packs and manufacturing chargers. They are supplying battery packs to customers in the two-wheelers, three-wheelers, and the industrial segments, which includes the Mahindra, Indus Towers, BSNL, etc. A small lithium-ion cell manufacturing facility with 2 gigawatt capacity will come on stream in FY26, which is, again, a very strong indication. But the 10-year plan is to expand the capacity to 16 gigs. Now, very positive commentary from Amara Raja. The stock hasn't done too well yesterday in line with the other markets. Other stocks, of course, in the market at large. Could be a day of bounce. Let's wait and watch. Could be a day of bounce for Cummins as well. Nomura has raised the target price to 3470 versus 3040. And Citi has increased the target price to 4384 versus 3519. For a stock which got heavily punished yesterday, let's see if there is a day of a bounce for Cummins. So that's the second one. And I'll watch out for Prestige Estates. Morgan Stanley's come out with a note on Prestige. They've retained an overweight with a target price of 1770, which is higher than the current price of 1550 or thereabouts. They say the target price raise is based on a strong pre-sales outlook, driven by strong launch pipeline and ready inventory. But they also lay out the concerns that high gearing and low margins are concerns. So, well, that's the long and short of at least some of the stocks that I have on my radar.
Muthoot, I think they reported earnings yesterday as well, so that's an important one. Profits are up 17% to come at 1,056 versus 902 crores. Revenues have also increased about 15%. Remember, spot gold prices have risen 22% in the Jan to March period YOY, which has, of course, helped loan growth for lenders such as Muthoot. Rising prices of the bullion has also benefited gold financiers because they've increased the value of pledged gold collateral, which has driven growth and also encouraged customers to come out and take more loans. So, all in all, I think the view is good earnings to Muthoot Finance. Couple of smaller ones, but worth a mention is Suvain Pharmaceuticals. It's been disappointing quarter on quarter. Once again, a weak quarter. Profits are down 5%. Revenues have sunk about 32%. Another one that I have noticed recently is Mrs. Vectors. We don't talk about this one often, but good earnings there too, right? I mean, revenue is up 17.5% at 406 crores. Profits have also risen nearly 22%. So it's been a good quarter for Mrs. Vectors, but Swan, Suvain, other ones that are going to get it hard. Gujarat Alkalis and Chemicals, they reported a loss at 46 crores. So again, another one that could be in a big sort of gap down this morning is Gujarat Alkalis and Chemicals. Loss of 46 versus a profit of 71 crores in the same quarter last year. Revenues were also down about 12%. Apart from that, smaller ones, Praj Industries is another one that reported earnings, not such a great set either. Lux Industries, profits are actually coming pretty good, up 85%, and revenues on the other hand have seen a decline. So it could be an exceptional item that could have impacted that. But I think those are the few counters that we are tracking on the pretty much in the last day of the earnings season now.
Yeah, and focus shifts in the next 48 to 72 hours on elections, and that's what we're going to do on Editor's Cut today, isn't it, Alex?
Absolutely. In fact, we've been looking at the market all through the week and trying to gauge what the forces that be are indicating. We've been trying to read the tea leaves, so to speak, but we won't have to soon. We'll have the results of the exit polls over the weekend. And of course, remember, yesterday, the volatility was quite significant because it was the end of the May series. The question is, we've moved from very close to 23,000, over 23,000 levels to about 22,500 below that mark today. Can one read anything from the way that markets have behaved over the last week, or is this par for the course?
You know, Alex, just that data, and you know, we pointed it out as well. Samina mentioned it. The FIs have started the series with shorts of, 3 lakh shorts, so to say. this is a very large short position. The last 3 times, somebody just told me this statistic, the last 3 times this happened, the Nifty's seen a massive rally after that. So
After that,
yeah, and of course, subject to, of course, fundamental reasons working out, etc., and stuff like that. So if the exit polls and the eventual outcome is not non-conducive to the markets, with such large
double
short
negative
positions,
there, not non-conducive.
not non-conducive.
so as markets expect.
As markets expect, or slightly better than that, because everything is a possibility now, right? The last few days, and Tamanna would have a better sense there, but the last couple of days, 48 hours, because as usual happens ahead of the election, rumors fly around and stuff like that.
Yeah.
But if it comes out on par, then, don't be surprised if there is a very large rally as well coming into play.
So then let's put things in context, right? You were saying earlier in the week, and I think it bears reiterating several times, phase 7, it's not done and dusted, it's incredibly important.
It is important. It is incredibly important, despite all of the narrative that you're going to see from both sides, the 2 major alliances saying कि बस हो गया है, हमारा हो गया है, ये हार गए, हम जीत गए. So everyone is going to say that. But remember, it's their job as politicians to go out and campaign.
Yeah.
It's your job not to look at WhatsApp forwards of various numbers. All the exit poll numbers you see, think about it. 57 seats will still go out and vote. So how can you believe any exit poll number decisively? The last opinion poll held would also have been several weeks ago. So just the basis of that data would not be accurate enough to look at. So with that warning or whatever disclaimer in place, 57 seats go to polls tomorrow. They're crucial because if the BJP has to top its performance last time round, okay, it has to go more than 3 seats on its own, and that's the best case scenario for markets, as we've seen from a number of brokerage notes. Then they have to increase seats where they haven't already capped. So if I say, so for example, Gujarat, Himachal, a lot of states, they're already, pretty much got
peak.
all of the seats. So there's only one way to go down statistically, and that is down.
Yeah.
So where do you have to increase your seat share? You have to get more seats in Odisha. And this time it's interesting because the BJP and the BJD are fighting separately. It's Naveen Patnaik on the other side and the BJP on the other side. So that's an experiment when you have to see which way it goes. You have to get more seats in West Bengal. They've already been making very consistent headway in West Bengal. Remember, a few days before the poll, Mamata Banerjee said, I'm not part of the India alliance.
Oh.
If need be and if required, I'll come out and support. Why did she distance herself? Because she wants to make sure that she doesn't lose any ground in her own state. That's her hallmark. So the BJP has to push more there. They've done very well in Assam. Can they increase their seat share there? So some of these states have seats going in. And, in the last phase. And this is where you sort of top up. And I wrote a piece for the website as well. Please go and see it if you can. Please go and read it. And one of the people I quoted Yashwant Deshmukh, and this is how he put it. Phase 7 will determine the difference between a majority and a comfortable majority.
So why don't we lay out those scenarios, Tamanna? Because at this juncture, we're kind of setting the stage for what you will glean from the exit polls. So I would think that the only thing that you can do at this juncture is scenario building.
Yeah. So scenario building is something that I think has been available a lot. You have the top brokerage houses doing that. We put out a detailed piece on what each of them are saying. And the only difference I would say from 6 weeks ago or 7 weeks ago is that your best case scenario has shifted lower. Nobody today is talking about 400. Nobody is talking about 400. If it happens, big bonus from a market's perspective. But that is not your base case. Your base case
I don't think that's
moved.
even a best case scenario right now.
It's not even a best case. So maybe a bit of reality has come in there, that a political slogan might not translate into reality.
What is the best case though?
So let me put it this way. The worst case scenario, from what I've understood, is the BJP alone not making 272.
Right.
Even if the alliance makes a majority, and which is constitutionally enough to run a government, BJP by itself
to
Sub
spell this out,
272 is a problem.
to spell this out for those that are unfamiliar with the politics of it, why would this not be a good deal?
Well, because then it restricts the BJP in policy making if they're dependent on their allies. This is a party which has been run by a very strong leader, a government run by a very strong leader, and then if you have to go into a UPA2 kind of situation where you have to keep your allies happy, then it becomes a problem to make decisions the way you have
Portfolios become a problem.
Portfolios, etc., policy decisions. So, I mean, there could be any kind of views on whether whatever's happened in the last 10 years is good or bad. I'd leave that to the politicians and to the political debate. But you've been able to do what you believed with conviction because you have the numbers.
Yes.
So you need the numbers to continue doing that. So that's what the street is going to see if they have rewarded policy continuity and want to be able to do. So that's the worst case scenario. Anything above 303 for the BJP, that shows that for a third term, after 10-year incumbency, you can top your tally. I think that will be seen as very positive. I don't know. What you think?
No, I just have a question. I don't understand these things as well as Tamanna does, but I just have one question to Tamanna or to both of you. Similar jitters ahead of the state election verdict.
Yeah.
It came up much better. Then there was the temple inauguration in January. What has changed between then and now for the market to get for people to get the jitters? That's something that I kind of fail to understand. But it's an interesting question. Any thoughts there, either of you?
So, I'll tell you what may have changed is, for one, you have to understand, and this is what a lot of political analysts were telling me, that's difference between 2019 and 2024 is that more voters have a smartphone and 5G, 4G.
But they did in December as well, right? And
availability to social media. So the opposition has gotten its act together in terms of dissemination of its communication.
And it's what I've also heard is that it's very different from 2019. They weren't as aggressive in 2019.
No, but this alliance was not.
Sure.
What's also happened since December is that though they started on it late, they did hammer out their seat allocations. So they now have a formula. The difference from December, and the reason there were jitters in December at all, is because in 2019 December you had the Congress winning 3 states. So which is why you assume,
the state elections,
Chhattisgarh, they won very strongly in 2019, they might keep it. That was a complete surprise.
Yeah.
So there was a positive surprise based on past precedents. Here your past precedents is a very strong outcome for the BJP. Yeah. Now in the best case scenario, after 10 years, will there be no anti-incumbency? So which is where the question comes up.
Let's see.
So I guess to a certain extent you have more time to think about it, Niraj. That's my only take. And there are so many headlines that you've read. There are, as Tamanna has pointed out, so many debates that you're listening to, and maybe you've had to question your own understanding and your own expectations. So, but we'll know soon enough whether that comes to pass.
Political assessment is the muddiest thing to do.
It is.
We often
psychologists have a very hard job.
I mean, it's part kite flying, honestly. It's part guesstimation, and the thing is, it's a zero-sum game, right? You can say anything today.
Yeah.
No one's going to hold it to you on June 4th.
Yeah.
So that's all right.
All right. So there you go. But at the same time, hopefully, we've kind of set the context and the stage for you to understand what happens over the weekend, the exit polls. As we've said repeatedly, we will be live on the weekend at 8 p.m. on Saturday and 10 a.m. possibly on Sunday to bring you everything that you need to know ahead of the start of trade in the next week. But do stay tuned. We've got to set you up for trade today, and we'll start with the F&O picture, and we'll be back on the other side of the break with that. So do stay tuned.
welcome. This is India Market Open. We are taking stock of the futures and options space, how things are panning there. And well, we have seen a little bit of, a decline as far as the Nifty is concerned. Yesterday was your monthly, expiry for the futures as well as, the options market. And, a lot of these factors which we are playing out now are perhaps on expected lines. If you keep an eye on rollovers, they haven't been up to the mark, but that's also understandable because I'm sure a lot of participants at the moment will not want to go whole hog into an event which comes every 5 years, potentially a long-lasting impact based on the kind of effects that the outcome could have. But for now, at least as far as the Nifty is concerned, we're off 22,500, which we're about 600 odd points away from life highs as well. And that said, we're starting to see a little bit more activity as far as the June futures are concerned. On an absolute basis, 48%, but this is also on expected lines, the first day of the new series. Let's move on and talk about the Bank Nifty. Again, early days here, but we did see the Bank Nifty show a little bit of a divergence yesterday. So while the Nifty was down, the Bank Nifty was advancing on the back of a handful of names from the private sector space. But now we talk about the options market. We move into that all-important, crucial 6th of June expiry for the Nifty weekly options. What we've seen is most amount of activity between 22,500 and 23,000. Between 22,500, 600, and 700, there's an ample amount of calls as well as puts written here, as you can see here on your screen. And remember that this has been a big shift, because just about last week when we did see, in fact, the Nifty, test 23,000, that's where we were also seeing a lot of activation around the 23,500 calls, a lot of those calls being written. And mind you, that this will also change through the course of the next 2 to 2.5 odd sessions. And I say 2.5 odd sessions because we'll have the outcome of the general election on Tuesday, a little later on in the day, perhaps the first couple of hours. We'll start getting trends of an idea, an inclination, an inkling of kind of what we can expect from the outcome. Now, coming down to your overall open interest distribution, remember until last week, or rather a few days ago, we were considering the 23,000 as a center point with 23,500 on the higher end and 22,500 on the lower end. Now it does seem like we've seen the limelight and focus shift back to 22,500. That's as the center point at the moment. Again, a lot can change between now over the course of the next 2 days, and that's very much evident in the kind of implied volatilities that you're seeing, the option premiums and the expansion in option premiums that you're seeing as well. Let's talk about stocks then. And it was a weak day of trade. So we have seen shorts for Piramal Enterprises, GNFC, Biocon, Titan, Tata Steel as well, among stocks which saw unwinding, longs unwinding for something like an ABFRL. We should have that on for you as well. So we have ABFRL, Max Financial, Gujarat Gas, along with Dabur India. All in all, a week day of trade, maybe expected. And the question really is that what do you do based on the current market levels? Where do you place your bets? Let's get in an expert opinion. We have Milan Vaishnav of Gemstone Equity Research who's joining us on the show. Milan, good morning. Thank you so much for joining in. How are you dealing with the Nifty at the moment? And what's the way forward? What sort of option structure are you deploying here?
Very good morning to you, Agam, and all the viewers. This would be basically a common sense-led approach as we navigate the coming week, because election results might come trickling in on Tuesday, but from Monday onwards, we are likely to see some increased volatility because of the exit polls and all that stuff. Now, taking a look at the Nifty, there are two things I am seeing. That one is that if we take a look at the options data by zooming out a bit and including some 15 strike price from the current levels on either side, I see that there is a huge buildup of the call OI at around 23,500 and 22,000 levels of the put OI on the low side. So what I feel that market participants are preparing for some 700 points of move on the either side of the Nifty as we go ahead into the next coming 2 to 3 days in the markets. So what I feel is that by and large, there is some scope of some short covering happening because we are 600 point off the lows, but off the highs. But taking a little broader look, I feel that market participants are factoring in some spike. If we try and quantify the spike that market participants are expecting, I feel that 700 to 500 to 700 points on the upper side, 500 to 700 points on the lower side is something what market participants expect from the Nifty, and that is how the options data is showing, at least as of now.
So based on that, Milan, what kind of structure are you deploying on the Nifty right now?
This time I won't be going for with any strangles because strangles can cause you a lot more damage when we know that the moves are going to be volatile. So this time I'll be betting on a potential technical pullback. I expect Nifty to test 23,000 at least once, even if it has to show some retracement. So I'll be going with a bull call spread. I'll be buying 6th June expiry 22,500 call and would be selling 23,000 call. Net premium that I would be paying would be around 220 rupees. Maximum profit potential here is 7,000 and maximum loss is 5,500 rupees. Now here we will need to book profits if Nifty sees 23,000 levels. And to even minimize the maximum loss figure, we can apply a protective stop if Nifty slips below 22,250 level.
Okay, so bull call spread as far as the Nifty is concerned. Well, Milan, I believe you also have a stock on your radar, that's Hindustan Unilever.
Yes, I'm going in with a little defensive stance this time, and we have FMCG index also showing a sharp improvement in its relative momentum against the broader markets. So I will be again going in with a call spread for Hindustan Lever. I will be buying 2360 call, June call of course, and selling 2440 call. Net premium I would pay would be around 2650. Maximum profit potential is 16,000 and maximum loss is around 7,900. Again, we will need to book profits if Hindustan Unilever moves past 2440, and as a protective stop to keep the maximum loss also with still lower, one can keep a stop loss at around 2,300 rupees on the stock.
Have it. So that's the view as far as Hindustan Unilever is concerned. Well, on that note, Milan, taking a moment to thank you for joining us and taking us through your views on the markets and giving us a handful of strategies to work with. With that, it's over to you, Samina.
Thanks, Agam. That's, of course, the F&O picture. The analysts do believe that there could be one technical back up, which could be helping the market soon. But nevertheless, Kush and Vineet Bulinchkar both join in with their technical and fundamental view. Kush, it's been a tough last couple of days of trade. We've closed up 22,500, but to just put this in perspective, we're only 600 points off a record high. So while everyone's concerned and talking about a correction, this is hardly one. At sub 22,500, are you betting on a technical relief rally today?
Hi, Samina. Very good morning to you and to all the viewers. Well, let me ask you this way. Just before a big event, going. Where would you have ideally wanted the market to be? Would you have wanted to be at the highest level, ever, or perhaps a little off? So I think the markets are positioned quite beautifully for, the big move, given that, the outcome does come in on expected lines, if not better. So I think from here on, a long position is warranted on the Nifty. Bank Nifty, I do believe that is on a firmer footing compared to the Nifty. Now, I have a different dilemma, though. My concern is how do you go long on the indices from here on? You can't go and buy options because the walls are so high and they'll be crushed come Monday, perhaps even Tuesday, Monday more so rather than Tuesday. So then, how do you position yourself? Perhaps the only way is to buy a limited quantity of futures maybe and hedge them via put, which again has a high premium. So the real dilemma is how do you position yourself if you want to go long on the indices? The view is bullish from here. We do see the Nifty, heading towards 22,800 and perhaps even crossing 23,100 if the results are in line. Bank Nifty will again make an attempt, maybe the third one this time, towards the 50,000 mark. So all in all, the positioning is very favorable. It's just that how do you go long on the indices? Perhaps the stocks are the best way to play this.
How do you go long on these indices, and the markets have to move into positive territory? We need a little bit of corrections in order to make that move upward. Vineet, how do you feel about the markets right now? Everything that we're seeing right now is typical of any big event. Sure, FI positions are on the short side. The open interest that we've seen across the series has dropped significantly. But the fact remains, it's an event, and I'm assuming most of the global funds, as part of their investment policy statement, would only want to go in hedged into an event like this. Are you concerned? Are you worried? Or would you go all out and buy this market, even at these levels?
So, I'm actually in agreement with Kush that, these declines are to be taken favorably. If you read the entire narrative that is being built around, you will realize that, the activists have started cribbing about EVMs and all that. So that clearly tells you that, there is a possibility that the incumbent government stays. And when that happens, it's only going to be a gap up. But, there is always a slim chance that things may not work out as you expect. Probabilities of even 10% can, derail your portfolio quite a bit. So, keeping all these perspectives in mind, I think the way to play this market is to get into sectors which are out of favor. We like FMCG is doing really well because of the present incumbent government having spent a lot of money. There is rural incomes coming back. And tomorrow, if you have a populist government, in case of a change, there also there's going to be a lot of money on the table for the rural. So I think FMCG is a very, very good trade to play. The other areas that we like are private banks and, some of the real estate names, which are into the tier 2, tier 3 towns. So I would be positioning my portfolio in this direction before the D-Day.
So, you're setting up a good base, I suppose, with the kind of, sell-off we've seen in the last couple of sessions. You're setting up a good base for a possible run-up if now all goes as per market expectations. Now, having said that, let's get specific. Kush, good morning. What are your top calls for the day?
Morning, Tamanna. A couple of stocks that we like are Indigo first. The last time around we were in studios, we were discussing how Indigo would be a good buy on the dip. And the dip is here and then some more, right? So I think Indigo from here is starting to look attractive. I'm not entirely sure if the fall is over. Yesterday perhaps could have been some rollover activity as well. But nevertheless, this is an attractive entry point. If it dips lower, my risk reward ratio will only get favorable. All of that said, from the near term, we're looking at 2275 and 4350 as the targets. 4080 is a support zone. Should act as a stop loss from a trading perspective at least. The other stock is Jyoti CNC, almost agnostic of whatever is happening in the market. The stock is doing its own thing. For the last, 2 out of the 3 sessions, the stock actually was locked in the upper circuit. So Jyoti CNC is one name that you could have in your portfolio from a medium to a long-term perspective as well. Trading bet 1050, 1090 are the targets. 950, is where you could place your stop loss.
Jyoti CNC looking interesting, Indigo looking interesting as far as Kush is concerned. Kush, what about Bharat Dynamics? That stock has been flying, results have been rocking. Would you buy it right now?
Did Samina put you up to this? I've been asking Kush this question so many times. It'll perhaps be a repetitive.
But numbers have come. After the numbers have come yesterday, do you think even more left?
Well, let's say from a purely technical standpoint, I would actually go out and buy this. There was a dip recently, just 2-3 sessions ago, almost entirely like the Indigo setup that we were speaking of. Now there is, an upside still left on the table. If nothing else, at least a 100-point up move. 1650 is the first level to look at. Once that is taken out, 1725 also. So I'm very constructive on these names. It's just the election, overhang, which is perhaps, stopping us. And also, a bit of the fact that, these stocks have moved quite a lot. That is just, holding back from giving out regular calls and big targets on these. But on the whole, very positive on the entire setup, BDL included.
Just before we get to Mihika though, Vineet, if we haven't discussed some of these names with you, just wondering, expensive names but delivering on numbers and reacting positively to those numbers. Are you still positive some of the defense PSUs?
So they're very expensive for me to go and buy them. to be very honest. I think they have everything going for them. The tailwinds, structural tailwinds are in their favor. Their numbers are positive. The order books only keep building up. But my only take is that, what are you paying for? So, I find them a little bit expensive, and I would look into the sectors if I were to do. I think Zentech looks very interesting. And the other company that I like is Lokesh Machines, which has a very, very veritable monopoly, if I may say, in the small pistols case. They've got their product approved, and the tailwinds out there are very big. So you have a 12 lakh uh, army reserve force equal amount, and the state police force of an equal amount. So the opportunity is huge. Lokesh Machines is doing very well in its existing business, and with this new vertical of defense coming up, I think this stock can play out well.
Interesting name, Lokesh Machine. Maybe we'll try and call the management post the election, Fervor is out of the way, to try and see what is it that they believe they want to do. Vineet, thanks for that recommendation. Okay, one of the factors that could help the Indian markets today is the MSCI rebalancing effective today. Now, Mika had brought us the details of the 13 Indian stocks to be added to the global MSCI Global Standard Index as well. Mika, bring us the details. What are these stocks? What is the possible quantum of flows for each of them?
Yes, so the May review changes do come into effect today with 13 Indian stocks added to the Global Standard Index. Now, Nuvama had stated that India could see $2 billion worth of passive inflows upon the changes coming into effect. When we talk about the changes to MSCI's Emerging Markets Index, additions under the large cap segment include JSW Energy, Canara Bank, Indus Towers. When you talk about additions to the mid cap segment, we have Mankind Pharma, Bosch, NHPC, Solar Industries India, Torrent Power, Thermax, Jindal Stainless, and Sundaram Finance. When you talk about the upgradations from the small to mid cap index, we have Phoenix Mills and PB Fintech. And when you talk about the removals and downgrades, we have Berger Paints that has been removed from the emerging market index. We have Indraprastha Gas, 197 Communications, which is Paytm, which has been downgraded from the mid cap to the small cap segment. A little bit on the flows. Nuvama expects $2 billion of passive inflows into India. It expects India's weight in MSCI Emerging Market Index to move from 18.2% to 20%, and it also expects highest inflows of $229 million for Indus Towers. It expects counters like Sundaram Finance, Torrent Power, Solar Industries to also get high inflows as well, and Berger Paints exclusion could have an outflow of $109 million.
Yeah, thank you. That's, of course, a whole bunch of, in fact, listing on those 13 stocks that are going to see potential inflows. Those counters could be in focus this morning. Well, Kush, of course, we've talked about a few of those defensive names, but anything in the railway pack as well that still looks good? I mean, RVNL is even beating the oddest odds on the street and manages to gain on most days. I know it's not in the F&O space, but on the charts or technically as well, any of those rail counters that still look constructive?
So, one that we've been discussing time and time again, the one that we've liked, amongst a lot, which is JWL, Jupiter Wagons Limited. While some of the other names are also doing well, RVNL in particular is now in an overbought territory. But, as is Vineet's dilemma, these stocks, on the fundamentals, they look expensive, and on the technicals, they look overheated. But, just a few percentage points correction here and there, and, they are again, on the move. So I think that's going to remain the story for some time. But JWL is slightly different in that, it doesn't really hit that overheated territory, anytime soon. You see a steady consolidation and then a breakout. So I think that's one stock that I would bet my money on, especially if I get, any kind of dip towards 550, 555 levels. But even otherwise, that's one stock that we continue to like.
I know we've talked about a few stocks that you've talked to Niraj about as well. But Vineet, what does your portfolio stand at this stage? How much cash are you sitting on? Are you sitting on cash to begin with, or are you fully invested? And if you are sitting on a cash call, how much % cash are you on currently? And what sort of rebalancing are you doing? Are you doing market neutral strategies? Are you doing staggered investing? Where is the bias? We're just trying to understand of how frothy these valuations are and what investors should be doing.
See, you always need to position yourself for a possible outcome, which will benefit you either which ways. So we are long FMCG, as we just spoke about. We are long export-oriented units in the manufacturing side. We are long private banks. These are three of the primary portfolios that we are very, very long. We are long on metals because this is an international theme, and irrespective of the outcome of the the polls, these sectors we have got a high conviction are going to perform. As far as the cash element is concerned, we are right now on about 10 to 15% cash, but looking to deploy right from the word go once the election exit polls are out.
Vineet, a quick word on what are the kind of bets that you would look at today, and want to get your take on what's been happening with private banks, or at least what we saw with the banking pack yesterday. Some of it could have been, I would say, the S&P upgrades and the after effects of that. But even in the CLSA note, and I think the conversation that Vikas Jain had with us yesterday, they talked about how they're now becoming constructive on financials and private banks. I wanted to know your view.
So, they have been laggards considering that PSU banks had outperformed. And the PSU bank outperformance was essentially to do with, the very, very low valuations and extremely positive metrics that had built up. But now with this kind of environment where, we are in a poll situation where, you have both the options playing out, the money has moved into the private banks, which have underperformed. So if you look at Axis Bank, its metrics are catching up with those of HDFC as well as ICICI. HDFC is getting its act together in terms of, getting the liabilities portfolio built up. If you look at the smaller banks, SFB, the Jana Small Finance Bank, it's really, really doing extremely well. It's straddled its portfolio along. It's more of a quasi NBFC come banking play. So they're very well positioned out there. So, if you take these selective names and play the sector, I think you are going to benefit really well from the private banks.
Kush, stay with us. A quick check on implied Nifty. It looks like we could be setting ourselves for a little bit of a relief rally this morning, 46 point higher. It should be a decent start, and I guess the bulls will be hoping that doesn't get sold into in the second half of trade. We'll take a break. We'll come back. Up next is pre-open trade, so stay tuned.
Welcome back. We're just about 20 seconds out for the pre-open rates to hit. As of now, the indications are that you might have a pop of green in opening trade, which would be a refreshing change from what we have been seeing for most part of the week. Is the pain, anxiety, and all of that behind us as we go into a very, very crucial 3 days of trade? Today, Monday and Tuesday. This becomes very, very important, and at least the first cut looks fabulous. Let's see if that holds up. And those really are the first set of rates. All right, let's talk stocks. Kush Bora, Vineet Bolinchkar with us this morning. Vineet, I want to come to you on Apollo Hospitals. Morgan Stanley note out sounding quite optimistic on it. It's a good quarter for the space, and Apollo Hospitals largely in line. If you look at that entire group of stocks, does Apollo stand out for you?
I think it's a very good defensive play. We have a target of 7,000 on the stock, which can play out over the next 18 months. And, in the medical hospital space, which is the best diversified play with, multiple levers of growth coming in, not only from, the build out of capacity, utilizations, and, improving margins. So I think this is a very good play to get into for those who are looking for a defensive.
Vineet, is it a multi-year story? I mean, would you just keep on holding a hospital stock?
Absolutely, undoubtedly.
Yeah.
And if you see how the girths of people are increasing everywhere, prosperity is all abound. We're throwing caution to wind, and premiums are going up. So I believe that Apollo Hospital has a brand there. You have the reach, and all the lifestyle diseases are only increasing. So I think it's a very good play to have in your portfolio.
Okay. Well, that's the word on Apollo Hospitals. I wonder if Swan Energy is already reacting to its numbers. Down 5%. So the people not looking at the top line but looking at the margins. Seemingly, it's just 1 minute. So let's wait. The other two, we already spoke about BDL. The other one is Bharat Dynamics. Should come up on your screen and see what that one is doing in trade. These are the result boys. Flattish for now. And Welspun Corp is the other one, wherein, again, a mixed set of numbers. Profit numbers were strong because of other income, but margins were soft. So for now, the market seems to be paying a little bit more attention to margins. Let's see if it changes at the end of 8 minutes. The other one, Kush, good morning, Niraj here. The other one which had a very weak day yesterday, I wonder if it's near some supports, because the brokerage notes on Cummins have looked very constructive today, post the con call. And all of them have raised, or most of them have raised the target price. The stock was down 6% today. Is it near some key supports?
Hi, Niraj. Well, not really. I mean, there's a 20-day moving average support, that comes in at 36, 20 odd levels. The stocks below that. The next support zone really comes in at, 3,400, 3,450 kind of zones. But I would have to say that, if you look at it from a setup perspective, just about a few sessions ago, the stock had entered over bought territories and was consolidating. This dip is actually, a welcome one, if you ask me. So, any kind of dip that, it extends further, perhaps to those, 3,400, 3,440 kind of levels, should be utilized as an opportunity. One more reason I am not, saying that, go out and buy, right when the market's open, is because the stock closed at the low point of the day. So perhaps some, pressure might have remained and, might come in today. So not entirely close to the support level, maybe a few, points to go from here on as well. But on the whole, very constructive. So 34, 34.50 should be a good level, to enter or re-enter if someone, had a trade earlier.
Yeah, so many smaller companies have reported numbers yesterday as well. Let's do a quick check on Muthoot. Muthoot Finance reported a pretty strong set of earnings for the quarter. Remember, gold prices have also gone up substantially. So 3% on Muthoot Finance in opening is what you're expecting. Lux Industries has seen their profits surge substantially. Niraj tells me that their margins are expected to go from 10 to 18% in FY25, and the stock is up 5.5%. The other one that we have is Suvain Pharmaceuticals and Swan, Miss Bectors, Gujarat Alkalis are some of the other ones you will see a reaction on. Suvain Pharma was bad, 4% lower. Mrs. Bectors had a good quarter. Swan is down 5% again on expected lines. Suntech Realty is up 2.5%. So lots of mid-cap and small-cap earnings. Kush, any contra bets this morning? Anything that you would pick up on an intraday trade, relief rally, any stock across the universe?
Well, a couple of stocks do sort of stand out, and that's a good segment to be into where you could see some sort of a rebound. Maruti is one stock that we like from a near-term perspective. We believe that the selling is a bit overdone in the near term. Also, the 50-day moving average support might just kick in. We've seen that happen in the past. Recently, just about a month, in a month or two, the stock rebounded from the 50-day moving average. So Maruti is one stock that I will have on my radar. Any kind of a rebound attempt that I see, this could be a candidate for a quick short covering trade.
The auto numbers expected tomorrow could be a candidate for short covering. That's the word coming in. Vineet, did you a quick one on any of the earnings we saw yesterday? I think Niraj has mentioned a few with you, but Mrs. Bectors, Gujarat Alkali, Suvain, Swan, Muthoot, Lux, anything that looks good to you in terms of what you saw? Suntech Realty, good earnings from them too.
I was just going to come to that. Suntech Realty,
are you buying that?
Yes, it's one of our top picks in the sector. We have coverage there. And we believe that, this stock has been under the radar for a very long time because of some pressure on, getting their few properties sold out. Now with that happening and with results looking very strong, I think this stock can get some momentum and fire really well. So we believe that this stock is set up for a target of around 800 over the next couple of years. Definitely, this is where I'm putting my own money.
Let's go across to the big brokerage calls for the morning. Puneet, my colleague Johnson with a couple of them. Puneet, good morning. What's on the list today?
Hi, good morning, Niraj. So first one is a very positive note by Morgan Stanley on Prestige Estates, where they are seeing, a 15% upside from the current levels. And this is on back of strong pre-sales that the company has reported, and they have a target price of roughly 1,770 rupees per share. They've increased that from the past level of 1,400. Now, what they are saying is that the strong pre-sales outlook for 2020 for the next fiscal year is at roughly 27,000 crores. And this is despite at a very high base of roughly 20,000 crores the company saw in the previous year as well. When you look at the new projects, that has been a key upgrade according to Morgan Stanley. They are seeing that price as well as cost trends have been very good for the company, and are seeing that completion timelines are really strong over the next 12 to 18 months. When we look at the pre-sales percentage, the assumption has been increased to roughly 70% from 60% by the brokerage on Prestige Estates. The residential launch pipelines across key cities of Bangalore, Mumbai, as well as in Delhi NCR is around 80% for the company, which are the key growth markets in the country. Finally, they have also concluded a deal with Ardia as well as Kotak for roughly 2,000 crores, and they've started to deploy this particular money as well to for securing land project parcels across the country. Collections will keep the net debt to equity also on a lower end. When we talk about the second one, this is in the auto space, Amara Raja Batteries. Now, the results came a couple of days ago, but the company was really strong in its conference call yesterday, and Nuvama has raised the target price to roughly 1,420 rupees per share, which is a 20% upside from the current levels. They have been saying that they have increased their estimates on the back of strong commentary from the company for the lead acid business, and they say that higher revenue and margin assumptions are one of the key triggers for the company. Now, one of the key things has been the new investments in the lithium-ion battery space for the company, and the brokerages have increased their investment value to 3 times of the total investment value from just 1 time previously, and the company has said that they should come on stream by the end of FY26. So overall, really strong picture on the traditional lead acid business as well as the new lithium-ion facility coming in, and those are the top two brokerages that we've selected for today. Back to you.
Amara Raja in focus after that Nuvama note as well. Kush, any take on Amara Raja?
Oh, very bullish. I think they released a call, I think last week sometime, on this. The stock, hit the target. Now it's actually slipping a little lower, but a good entry point. On the whole, very constructive on this. 1275, 1300 is a good level, that the stock could attempt. to reach in the near term, and the support zone also comes in at 1150. So the risk reward ratio from a 1:2 risk reward ratio is fairly attractive. So very constructive on Amara Raja.
Vineet, what about you?
Very positive. Battery storage is going to be the theme for 2025, and it's going to really, really do well.
You're an excited. Was that
Yeah,
my
both.
question?
I just wanted to. I wanted that question. That's why the came.
Yeah, Vineet, for you, Amara Raja versus Exide.
Amara Raja, HBL, Exide, all the battery storage stocks are going to do fantastic. They're going to have a great time.
All these
Can I just Vineet, just one follow up to that? Are you sensing earning multiple upgrades there, or do you believe earnings growth will come in FY25 for these companies?
So it's going to be a combination of both, because capacities have been built out. Now they're getting into the gigawatt storage space, and battery storage is going to come up in a very strong way because of pumped storage schemes that are going to abound. So they're going to contribute to this. EVs are going to get traction. Modi has very well said that EVs are going to be one of the important themes which people are not focusing on in currently. So I believe that these are some of the reasons where you will see all the battery stocks perform well.
Are you buying metal stocks right now?
Hindalco on dips.
What do you define as a dip from current market price? A 5%, 10%? What sort of a correction is a dip?
5% correction is a dip. Okay. In the metals are in a very, very strong space. It's a very, very long bull market. It's going to be lasting from 8 to 10 years. And, the kind of capacities that need to come up, supply is not keeping up with that. So I think that demand is very, very strong, and we are going to see some very, very long drawn-out bull markets take place.
Kush, Tata Steel is expected to see a gap up this morning. Would you consider going long at 166 intraday maybe?
No, not really. There is some resistance that might come in, and you could see some sort of profit booking. So perhaps for an intraday perspective, you'd best avoid or take some money home if you had it at a lower level.
Post the pre-open session, Kush, anything that you want to add to your list of picks for the day? Anything that you find interesting?
Couple of them, but I think I'll restrict myself to just the HUDCO call for now. Yesterday too, the stock had attempted to go past the 270 mark. It did for a brief while, but then with the market pressure, it slipped. I think the stock could reattempt an up move towards to 270 and then perhaps a 276 also.
I missed that. Which stock? Which stock did you talk about? HUDCO. Okay.
HUDCO, yeah. HUDCO.
Okay. So HUDCO is a top call this morning. Swan Energy looking like it's in the pain. Orient Electric showing a lot of action pre-market as well. As is Bosch, AstraZeneca. So you have a good mix. The realty index is also up, at least in the pre-open session. Prestige, Macrotech and Suntech, all three of them doing fairly well this morning in the pre-open session. Any thoughts on realty, Vineet, apart from Suntech?
I think Suntech is the trade. India Bulls Real Estate, extremely positive out there. So these are the two stocks which are cheap and have a long way to go.
Okay. India Bulls Real Estate, I'm hearing that after a while though. I must say a clutch of names, very prominent names, including Utpal Sheth, have invested in the latest round. So that is something. What's the rationale for India Bulls Real Estate, Vineet?
So, they have a land bank which is about 3,500 acres. Average cost is about 40 lakhs an acre. Today, you go and buy any piece of land, 40 crores to 60 crores is what you get. So, you're sitting on a huge inventory which can last them for, 5-6 years, bare minimum. So, growth is going to be strong. And, all of this land bank is not very cosmopolitan. So it's not like it's Mumbai or it's Delhi. It's well spread out. And you are going to see the big run in real estate stock coming from, B and C towns.
Okay. Well, Kush has mentioned thanks Vineet for that. Kush has mentioned his one top call is HUDCO. as the pre-open rates have settled and banks are still looking okay, I wonder, Kush, just very quickly, 20-second answer. If somebody was long on ICICI Bank yesterday, it's starting off in the green. Would you continue with the longs ahead of the exit polls, or would you take money off?
No, I'd continue with the longs, fairly constructive on the entire banking space, ICICI Bank as well.
Okay, so constructive on banks per se, continue with the longs. Maybe Kush's answer might change towards the close as we hit the last 1 hour. And maybe if gyrations happen, let's wait and watch. But remember, today might be a slightly different day than yesterday simply because of the fact that we don't have too many block deals. So no FI block numbers coming in. Plus the MSCI flows likely to help the cash markets as well. So that's to be kept in mind too. First day of the new series typically behaves very differently than the last day of the previous series. So that's also to be kept in mind. For now, starting off well, but let's see if this lasts. 0.4% higher, 22578. So somehow just it's very difficult to see people take a very large positional call ahead of the exit polls. Bank Nifty about 0.5%. So this one is continuing from where it left off yesterday. Mid cap is in the green, small caps, and I also want Nifty IT to just come in. Actually, just get the heat map up on the screen and see if the IT stocks are correcting or no. But starting off well, really, for the index, a complete mirror image of what happened in trade yesterday. The number of green is far higher than the quantum of red. Apollo Hospitals, despite the numbers being in line, is reacting positively because numbers were good. 77% uptick in PAT is nothing to scoff at. Adani Enterprises and Adani Ports up about a couple of percentage points apiece. There's a Jefferies note today speaking about the deleveraging and the show that the group has put up. Maybe that is why the stocks are doing what they're doing. M&M, because of the BofA Securities upgrade, is up about 1% as well, 1.5%. There's some strength in Shriram Finance, NTPC, Bajaj Finance, Coal India. Essentially a clutch of stocks in the green. So that's to be borne in mind. But some of them are moving on news. Adani Enterprises now almost the top gainer on the index, so pretty solid move there. What's not doing well? IT continues to sulk. Infosys down another 1.25%. LTI, Mindtree, HCL Tech, TCS. Boy, we'll talk about IT with our guests because 2 days on a trot now. These stocks are not looking good. But yeah, that seems to sum up the action. Apollo Hospitals and Adani and M&M, all three on one side, and IT on the other side, Tamanna.
So a bit of a relief rally, perhaps, after 2 days of pressure coming in. Let's quickly look at what your broader indices are doing this morning, and you're seeing that reflecting there as well. The Nifty Mid Cap 150, about 1% up. The Small Cap 250 also about 0.5% up. Now, in some of the stocks we're seeing, you're going to see Apollo again, just Apollo Hospitals, because it's seen a positive sort of up move today. So a good day for that company on results, and I've picked a clutch of stocks which have shown earnings impact. So Apollo is up, Swan Energy down 5%, Bharat Dynamics up 2.5%, come off a bit from the open session sort of up move that Bharat Dynamic was seeing. But remember, that's a stock which has run up. Numbers were good. Suntech Realty is the other one that we should watch. But real estate overall has been having a good morning. So if you look at Suntech, Prestige and Macrotech, you see Realty in flavor. Suntech has seen a bit of a tepid response to its numbers. Now, Nuvama has maintained a buy with a target price of 1940 for Prestige, and you're seeing that stock respond. And obviously, like I said, Realty is in a bit of flavor as well. I'm going to add Geo Financial Services to that list because it was in the stocks that we were watching. A beta launch has been announced for an app, the Geo Finance app, and the stock doing okay, just about 1.5-2% up right now. Remember, this is a space which is seeing a lot of competition and a bit of regulatory headwind as well. So I would say relief in the sense of a positive start, Samina, if nothing else, in the broader markets. Maybe no wild gyrations in terms of moves, but overall looking good.
Looking good, yeah. It's a little bit of a relief rally, like you'd call it, after 5 days of easing that the markets have seen. Remember, we're not significantly or drastically in any bear territory as such. The record on the Nifty was about 23,100. Yesterday's close was 22,482. So that's only 600 points or 3% in that sense from record levels. There's a little bit of calm this morning. F&O expiry is behind us. We're going into a brand new series. Global cues are muted, but there's a little bit of decoupling as well because most of Asia is looking good despite profit taking that was seen on Wall Street. Lower crude is also what's helping our markets on at more macro level. Well, in terms of stocks, one that stands out for me this morning is Vodafone Idea. It's very obviously out of the F&O ban, and the stock has been a contra call for a lot of investors and traders alike. Number of big brokerages have come out with aggressive buy calls on Vodafone Idea. At 15.20 is what we have a Vodafone Idea. Tamanna has highlighted a whole bunch of earnings. I'll take you through the other ones that we've not talked about already, which of course are in focus this morning, maybe on back or largely on back of results. So Suvain Pharma, if we can pull that one up, let's see how the stock is doing. It should be seeing a downtick in trade. 2.5% cut is what we have on Suvain. Mrs. Bector's Food Specialities, the numbers were good. It's a good quarter for the company. The stock is up 1.5%. Gujarat Alkalis and Chemicals, very bad numbers coming in from their quarters, posted a huge loss versus a profit. 3.5% cut on Gujarat Alkalis. Moltech Packaging, Lux Industries, BGR Energy are some of the other ones. Moltech is down marginally. BGR, Lux Industries is up 5%. You've also got BGR Energy that trades currently flat in terms of trade. Along with Suntech, most of those other real estate counters are doing well. Praj Industries, they posted a good set of earnings too. Should see a movement on Praj. 2.5% higher is what we have. Well, stock of the morning has to be the Adani pack. They're looking pretty good. Adani Enterprise now at the day's high point, 2.5% higher on the stock. Phoenix Mills is up 5%. Sundaram Finance, GMR Airports, Solar Industries, Oberoi. So real estate, which sold off sharply yesterday, is trading in the green across the board. Exicom Tele, if you can pull that one up, 10% uptick on the counter. Solar Industries is looking good. So all these counters that have also been added to the MSCI index are seeing some gains. I'll highlight for you what those names are, and you will see a reaction of that on the stock performance. So you've got Bosch, Canara Bank, Indus Tower. These are stocks that will be reacting positively. Torrent Power, you can see the stock is up 4%. Phoenix Mills has been added, and that's why it's the top gain on the broader markets. Sundaram Finance, Thermax, NHPC, PB Fintech are some of the other ones. And all those stocks are seeing an uptick in trade on back of the rebalancing that kicks off from today. So lots of movers and shakers, but very quickly, I'll come to you, Vineet. Vodafone, do you have a buy call on Vodafone? And if yes, what's your target price? At 15 rupees?
Vodafone, I am not a big fan of Vodafone. I will wait this out. I need to get my numbers more clear, so I'm not very constructive about it.
So Vodafone, there's a bit of a question mark there as far as Vineet is concerned. Kush, I'm wondering if you have a call on Vodafone, and let me add Paytm, two companies who, despite fundamentals, continue to defy the odds.
I thought my perhaps the last question for the day, or perhaps towards the close, will be more tough one. Both of them are very easy. They are still an avoid for me. I will stay away. Vodafone, once it crosses 16, will reconsider. Paytm, not in the near future at least. So yeah, avoid on both of them.
What is the tough question you want to answer, Kush? Why don't you tell us yourself?
The one that I posed for myself, how do I go long in this market on the indices? I mean, other than a futures trade, there isn't much that we can do via options and not even hedge. So that I'm probably just trying to figure that out, perhaps some mixture of an option strategy, buy or sell. But other than that, this is going to get a little tricky going long. Perhaps stocks will be the best way to play it. I'm answering my own question here. But, the stock could be the best way to play it rather than the indices.
One stock that's done well, because Tamanna, I had a good set of numbers day before yesterday, GMR Airports, but somehow didn't react because maybe of the market mood and is recovering a bit today. And that's the second best performer on the Nifty 500 today. And a strong FY24. One would presume that a decent FY25 in the offing if Indians continue flying the way Indians are, which is great news, by the way. But fundamentally, Vineet Bulinchkar, do you have coverage on GMR Airports?
No, we don't have coverage on this company.
But your thoughts?
But I think, so very positive on the airport space, both Adani Airports, and which is part of Adani Enterprises, and GMR Airports. They're doing a really good job. They've got multiple properties. multiple assets across the globe. And I think this is one stock that you should keep on accumulating on any dips.
Sorry, similar question as Apollo Hospitals. Is this a buy and hold for multiple years, or is this a short-term call, if you will?
No, see, the profitability is only going to get built up. They're going from a loss to profit. It's a journey, and then the compounding starts. So you have to buy this with a very long-term perspective.
GMR Airports is the one that I was talking about, of course, and Vineet was talking about GMR Airports, where the profitability will keep on building up. Kush, I wonder, between the top 3 or 4 top movers, again, giving you an easy one maybe, but a Torrent Power, GMR Airports, and I'll choose a Macro Tech, actually, because that one too is in the green, maybe a Phoenix Mills. 3-4 names out there. Any of these that look good for a short-term trade?
Niraj, Torrent Power was on my radar. It's up 5% already, but I will still back this one. And for a level of 1575 and 1600 as well, I think Torrent Power will be my pick. I think election results or no, this stock will continue to do well. So among the names that you've mentioned, from a near-term perspective, Torrent Power looks good. And just while we're on the subject, Jyoti CNC might just hit upper circuit, just about a few points away. So if anyone's caught that, great, will be a good idea to continue to ride this one rather than book out early.
First tendency of trade that might have been tough to execute, but at 925, if you've got to give me a fresh buy call, which one would it be?
Well, I think I will still go with Torrent Power. It was on our radar, but Hutco seemed slightly favorable, so that name popped up. But other than that, I think a Torrent Power, despite a 5% kind of an up move, I think I'll go with that. So Jyoti CNC, Hutco, Torrent Power, some of the names that you want to keep on the radar, and the preferred one would be Torrent Power with the momentum, and number 2 will be Hutco.
It's very interesting, actually. Yeah, Jyoti CNC is now almost nudging the upper circuit level, 1050 odd, 4.81, and Jyoti CNC Automation, MacPower CNC, these businesses have actually done really well ever since this whole clamor for the factories and the Apple factory, etc., have come into play. MacPower was maybe 300 about 18 months ago. It's sitting pretty at 1500 or 1415 currently. I mean, if you just look at a 1-year chart of these businesses, and Jyoti CNC is a recent listing, if you will, but some pretty stellar run for some of these stocks. MacPower CNC 1415, Jyoti CNC, if we can pull up the maximum chart available, again 1-month chart, very strong. It's a recent listing, like I said, not so recent also. Is there a larger time frame chart that we have on Jyoti CNC? Yep, 3 months, 74%. So pretty strong showing there. We need, while Kush pointed it out technically, fundamentally, clear these businesses have got the order books which are flowing. Are valuations stretched? Have you looked at these businesses at all?
Yes.
Vineet, Jyoti CNC and MacPower CNC, and any other business of this nature?
Jyoti CNC, without eyes closed. Very, very good story, playing out quite nicely, and has a great prospects going ahead.
Fair call. Okay, gentlemen, we'll leave it at that. Vineet Bulinchkar, Kush Bora, thanks so much for taking the time out and being with us and giving us your thoughts on the penultimate day of the exit polls. Must have been a difficult one, but thanks for being with us today. When we come back, we talk to the management, which is possibly the stock of the last 48 hours, Cummins. They came out with a very good set of numbers. Stock took a bit of a beating yesterday. Brokerage is very constructive. Ashwath Ram joins in to talk about Q4 earnings and more. Cummins India came out with numbers which looked pretty strong operationally, and while the stock reacted negatively yesterday, brokerages have come out fairly constructive after the con call, despite the fact that there might be some competitive intensity increasing in the second half of the current financial year. Mr. Ashwath Ram, Managing Director at Cummins India, joins in to talk about FY24, but more importantly, what could be near to medium-term hold in store. Mr. Ram, great having you. Thanks for taking the time out. Good morning. Hope all is well. Niraj here.
Thanks, Niraj. Everything is good.
Great. And just trying to wonder if everything stays that way, because it's a volatile world. Your exports have come off a little bit despite a very robust showing that you've done in Q4 and arguably FY24. How do you see the lay of the land for the next 12 months?
Yeah, I think exports are getting ready to bottom out. There are still all of these geopolitical crises in the Middle East. China is still not picked up completely. Africa has a lot of currency-related problems. Latin America has slowed down. Europe has slowed down a lot. So we are seeing demand across all of our export markets is down. And we expect it to probably bottom out by next quarter and then start to recover again. So the short-term outlook is slightly bearish as far as the export markets are concerned. But the long-term outlook continues to remain positive from because we've got so many new products and so many more markets that we can reach.
Okay. But which is heartening to hear if indeed exports are in the process of bottoming out. Although I can understand completely it might be a difficult call to give about the timelines. It's just such a volatile a world. Talking about India, Mr. Ram, the CPCB plus norms, right? 1st July 2024. Now, I presume you've been ready for it now for a really long time. I just wonder, when you scan the landscape, how ready to your mind is competition as well? Would you have a bit of an easy run in the initial stage? Do you reckon competition will pick up? And what does that do to pricing power / margins?
Yeah, it's quite tricky to answer that. We have been ready for a very long time. We've been ready for over 18 months. We've been selling products right from the start of when the norms came into effect, which was in June of last year. And with the extension, everyone has had an additional 1 year to prepare. So my assumption would be that almost everyone should be ready. My assumption also is that we have not seen the full impact of competitive pricing in the market yet. And so only those niche customers who've been buying the CPCB4 plus products in a couple of the regions around the country have been paying for the product. Once bulk production comes in, we will know the reality of what the exact margins of CPCB4 are. We expect them to still be incremental to CPCB2. As far as readiness is concerned, we are overly ready, and we don't see any dip in the domestic market because of a pre-buy or any transitionary period. But I would also assume that others are ready, and so we will have the regular competition in the market. We think we've had 18 months to test some of the best products that are available in the country. And so that does give us confidence that we will be able to continue to perform well in the markets.
Mr. Ram, hi. It's also Samina joining in. Help us understand the split between your domestic volumes and your global volumes, and also going into the next couple of years. What is a fair expectation in terms of annualized compounded growth for, say, maybe the next 2 to 3 years?
So right now, when we look at all the markets, it's roughly like a 25% to 75% kind of split. Roughly, don't quote me on the exact number. I'm telling you from the top of my head. But our ambition is that exports should be somewhere between 35 to 40% of our revenue. That is what we are aspiring to do. So we will continue to focus on increasing exports out of India, and we'll continue to develop products and attempt to grow that share within the pie. as the pie keeps expanding.
Mr. Ram, so if you're looking to push exports to up to 35-40% as the pie gets bigger, what I want to understand, and I'm making an assumption that exports are better margins in terms of business, and hence it's better business sense to do that. On the margins, we've seen a clear improvement. In terms of core operating margins, what does that stand at? And where do you see that go over the next financial year? I ask you this because I do know that raw material prices have been on the uptick.
So a couple of ways to answer that. The first is that export margins are slightly better than domestic margins, not dramatically better than domestic margins. But what exports does is it balances out the ups and downs of a very cyclical power generation market within the country. So if you have a bigger ratio of exports, you're able to even out some of the volatility, because global markets react slightly differently from the way India works. The second is we have been focused on improving the core margin across all the businesses. So if you look at a 5-year kind of trend, we have continued to improve the margins in every part of the business. So even if commodities are to go up, and right now we have the perfect storm of good news in that our mix is good, commodity prices have been reasonably stable. We have been able to hold the pricing. So all variables have been favorable to us. It is unlikely that this kind of scenario can just continue forever. But we continue to focus on cost. We continue to focus on attempting to hold or retain the kind of margin aspirations that we have had as a company. So one of the things I've been saying is that we are not doing growth just for the sake of growth. We are doing growth. We want profitable growth. And for that, we continue to focus on all aspects which relate to profitability, which is cost, which is design, which is efficiency. So we continue to focus on all those variables.
Ram, Tamanna here, and you talked about a variety or a set of variables which could impact growth. I was wondering how you look at the uncertainty in global metal prices in that picture. Because I think that was a question you faced in the con call as well, and you did say that it would pose a challenge to gross margins. Can you elaborate on that?
Yeah, if you look at all the big variables that go into production of our products, things like copper, steel, nickel, all of those variables, including that of crude oil, etc., over a 3-year trend have now have bottomed out as far as the commodity prices and are now starting to trend upwards. So because we were able to, when we increased prices when the commodities were really high, and we were able to hold the prices as the commodities went down, now that the commodities start to increase again, expecting the same level of margin is going to be, maintaining the same level of material margin is going to be difficult. Of course, that doesn't mean that we just say, okay, we are at the mercy of the commodities and whatever happens up or down, there's nothing we can do about it. That's why we work on controlling cost, we work on controlling efficiency. We do have a product by which we can get better margins, etc. So we will try to offset a certain chunk of commodity price increases through all of these actions.
Yeah, so just that one bit, it sounded interesting. The product that can help offset, margins. Can you tell us more about that?
Yeah, so for example, as we are going from CPCB 2 to CPCB 4 plus, it's a higher technology product. There is more value-added content. There is more of the whole chain that is produced by Cummins. So that helps us have a better cost profile and therefore have better margins on the product. And if the same product we can take and we can then export into other markets, then we have leverage on scale as well. So that also helps to have a lower cost profile so that margins can be better.
Niraj.
Okay. Mr. Ram, just over the next 24 months, I'm just intrigued. We were speaking to a global economist of Nomura who mentioned that just by virtue of how there is a natural a change of China vacating a lot of pockets which it was earlier present in, and ASEAN economies getting into that fray, would mean that a lot of focus of production in ASEAN for the world would pick up. I'm correlating that with your earlier answer about how you believed exports are bottoming out, and an earlier conversation with all, or rather a conversation with all MNCs about whether India becomes a hub naturally because of the ability to produce on scale at cost. Can the buoyancy in export growth be much stronger than what the street might envisage over a 3 or 5 year period?
It can, provided we fix some of the fundamentals within our economy. The ease of doing business continues to remain a challenge. We continue to have higher costs of energy. Logistics is still a challenge. It takes a lot more time for material to flow within our country, and logistics as a percentage of cost out of India are still higher than in some of those other markets. So combination of all of those aspects, as long as we're able to fix, we're able to have better infrastructure, we continue to invest and grow the scale, we continue to deliver very high quality of product. I don't see any reason why we should not see very robust growth in the exports market.
Sorry, just one last question. That could take your capacity utilization levels, if it works out for you, Mr. Ram, higher than where they are right now, let's say even in FY25?
I think so, because as of now, our utilization based on the invested capital is roughly about 50%. Based on manned capacity, it is greater than 90%. So it's very straightforward for us to add in more people and grow capacity if as the demand picks up.
So hi, it's Samina again, and I want to understand from you about your data center business. It's becoming, it's growing, and I think the focus on this is there going into the next couple of years. Over the next 2 to 3 years, how much of power gen revenue could be coming from data centers?
So it's grown very rapidly. In the last 3 years, it has grown from almost 1 or 2% of our business to nearly 10% of our power generation business. And globally, it's even bigger for us. It may be as high as 20% of our global power generation business. And the demand is so high that some of our factories globally are booked for somewhere between 12 to 18 months. So this market segment continues to grow very robustly, not only in India, but around the world. We don't see any slowdown in this segment, at least for a couple of years. As we are one of the leading technology providers in this space, we think the opportunities will continue to grow for us and become a larger share of our pie.
Larger could it get, Mr. Ram, over the next 2 to 3 years? I mean, you've gone from 1-2% to 10%, like we just spoke about. How significant can this be? And also quantify it for me, if possible, not just percentage and actual numbers. If there is an in-house number that you're focusing and working towards.
We're not really focusing on a very specific number, but certainly the opportunity in the next 3 to 5 years is for it to double again. So that's the scale of opportunity. It's pretty phenomenal. And we are developing the whole range of products. A big chunk of those products are being localized or are already localized. So we have a good market position to be able to compete in that space.
All right. Thank you so much, Mr. Ashwath Ram. Fantastic speaking with you. And hope to have a conversation once again soon. That was management of Cummins talking about their Q4 numbers. But we continue with our focus on numbers. On the other side, we speak to Sunita Reddy on Apollo Hospitals. Welcome back. Focus now on Apollo Hospitals, and Sunita Reddy, Managing Director, joins us now on the show. Welcome, Ms. Reddy, on board, and great to speak with you on NDTV Profit. Let's start with the earnings and just the bare bones numbers. Now, Q4 is traditionally a good quarter. It's reflecting in your numbers as well. But what has been the key highlight in your view?
So healthcare services growth is definitely a highlight. We grew revenue at 17% to 2,563 crores. So total revenue for Apollo Hospitals consolidated was at 4,944 crores, EBITDA at 640 crores, and healthcare services, our EBITDA was at 590 crores. So clearly, I think the growth in healthcare services by 70% was very good, and it bodes well for the future for our current quarter. So beyond that, profit also improved. We registered 280 crores of profit for healthcare services, a growth of 9%. EBITDA grew by 13% to 593 crores. So on the whole, I think, good revenue, good EBITDA, and good PAT. As part of the consolidation, Apollo Health grew by 12%, and clearly this is to 2,027 crores of revenue with a EBITDA of 12 crores. So, we're moving from a negative to a positive, and that is clearly one of the highlights. And Apollo Health and Lifestyle showed a 20% growth this quarter with a revenue of 239 crores. So, we are seeing better pickup. Apollo Health and Lifestyle was at 335 crores. So we are seeing a better pickup in revenue across all verticals. We are also seeing that, our profit has improved. On the whole, it's improved by 70% over last year for quarter 4. Going forward, we're looking at healthcare services, better asset utilization. So our current occupancy at 65, we're looking at moving it to 68 to 70%. And we must, as we go forward, we're looking at better volumes. Our volumes for inpatient was at 6% and outpatient at 9%. We believe that we can register a volume growth of 10%. ARPOB improved by 10% to 59,000, net of doctors' fees. And here again, with the change in case mix, we believe that we can deliver a better ARPOB as well. And all this should flow down to margins and profits.
Yes. Let me just focus, of course, healthcare services has done well, but let me just focus on the healthcare part of it. And, the brick and mortar pharmacy business is also, generally a cash guzzler. When do you see this business turning profitable? I know you went EBITDA positive last quarter, but when does it become profitable?
So the brick and mortar part, for the 6,030 pharmacies, the revenue actually grew by 17%. The back-end margin was at 7.3, so it's a very healthy margin. And moving forward, we're looking at combined healthcare margins of around 9%. So it's on a very good track.
And what about the ARPOB guidance? That's also been robust. Where do you see that going?
So I think, with the case mix improving, we can look at an ARPOB improvement of maybe 7%.
What is your timeline for your target for occupancy? You're saying you want to move your occupancy rates from 65% to 68 to 70%. By when do you see that happening?
This year. We've already started, right? First quarter. So 24, 25.
Yeah. Let's talk a bit about your expansion plans. You're going into several newer cities. What's the timeline for operationalizing these, and how many of these are going to be greenfield? What's the mix like?
No, it's a mixture of greenfield and brownfield. So our expansion plans currently are to add 2,000 beds. And this will be, in Gurgaon, we're adding 450 beds. In Hyderabad, we're adding 300 plus an additional 100. In Calcutta, we're adding 250 that could go up to 300. In Pune, we're adding 400 beds. So, this is a network-wide expansion that covers the north, the west, the east, and the south. This would come on stream from 2025, where we'll have close to 1,000 beds coming on stream, where every year we'll be opening for the next 5 years for 800 beds, 500 to 800 beds. So our current base is 8,000 operating beds. We have we have, including managed beds, it is 10,000 beds. So we're adding 2,000 beds with the potential to add another 2,000 beds. And it is both greenfield and brownfield.
Okay. And what will be the contribution of all of this expansion plan to revenue?
If you look at our revenue growth, it's currently 17% for healthcare services. So when you add a hospital every year, and especially in 25-26, let's say, in 3 to 4 years, you'll see 25% uptick in revenues.
Are you concerned about plateauing of growth? And that's, a conversation across industry theme. Is 15% revenue growth the new normal?
No, I'm very optimistic about growth. India is underpenetrated. Demand supply is intact. But what is more advantageous to us is the fact that now the penetration of private insurance. So if you look at our payer mix, so this is really where we have a lot of leverage. Private insurance is currently at 40%. So it's moved up by 10%. And and now with international travel, 7% of our revenues come from foreign patients. So clearly, these two things will definitely drive up revenue.
And so, you talked about the contribution from foreign patients. What is the outlook for that? Where do you see that growing?
7%, but in the metro cities, it is about 20%. So it is growing. Our plan is to make sure that it reaches 10% next year and moving on to 15%.
Your focus, of course, for the chain is on oncology and the specialty segments. I want to understand from you, ma'am, what is the contribution of these two verticals, especially oncology?
So oncology, we saw 40% growth in oncology. And clearly, this is now 20% of total revenues. And cardiac also at close to 20% of revenue.
I'm just going to segue here. While 40% growth in oncology, great for the business, and your stock is performing, it's also an indicator of the rates at which cancer is growing in the country, isn't it?
Because you're also screening them early. Part of what Apollo is growing is preventive healthcare. So as we screen more patients, we're coming up, the incidence of cancer has really grown. So we expect to see that vertical to grow by 20%. Currently 2,400 crores of revenue in oncology.
Just a quick question while I have you here, and we've got the opportunity to speak. The Supreme Court is right now listening to an argument which says that rates should be standardized across treatments for public and private hospitals, and there are a lot of views on that. I was wondering what your view is.
So I think more than my view, I think the latest ruling from the Supreme Court, which said that it cannot be. The government cannot dictate pricing because it is really market forces that dictate pricing. It is really when you cannot control the input costs, so you cannot mandate input costs. It's very hard to mandate output. So the price is very, very difficult for the government to put a mandate on pricing. Having said that, I believe that with the penetration of insurance and the fact that at Apollo itself, 70% of our patients, our average bill is only 1.7 lakhs. So clearly, going forward, we believe that healthcare will be affordable with the penetration of insurance, and that this is what the government will focus on.
Just a last bit. I was going through your presentation, etc., and you're talking about a new innovation called ZapX, specifically for brain tumors. I wanted to know more about this.
So I think at Apollo, we really want to do everything that we can to see that we can save a patient's life. And now it's the quality of life also that matters. So with the Zapex machine, it is really a radiation, a laser that goes to it's very tumor specific. So you're able to radiate small tumors rather than have an open surgery. And that is a huge benefit. I think in less than 2 months, we've done 20 cases with good outcomes. So we are looking at, we are looking first at the benefit to the patient, and second, the fact that there is no machine like this in all of Asia. So definitely the demand coming not only from the local patient, but also from overseas patients, because we built the whole center of excellence for neurology and for oncology, so it's connected.
Yeah, just last question. That this treatment really sounds cutting edge. What is the cost compared to traditional treatments?
It is expensive. It's probably 100% more expensive. I think one treatment is around 9 lakhs. But I think the benefits in terms of invasiveness, quicker, you're back on your feet, discharge. It's outpatient procedure, so there are significant benefits.
Yeah, absolutely, and it is cutting edge. Thank you so much for speaking with us, Sunita Reddy there, Managing Director of Apollo Hospitals, on the numbers and all of the innovation which is happening, and especially the fact that you have this kind of a technology for the first time in Asia. With that, it's a wrap on India Markets Open, but stay tuned. Talking Point up next.
Thanks for tuning in to Talking Point. I'm your host, Niraj Shah. Penultimate day to the exit polls, 3 days. Yes, 3 days to the election verdict as well. I was counting the number of trading days. So it's a very exciting time to be an Indian market watcher. I don't know if it's as exciting a time to be an Indian market investor, especially if you are a very active investor. But we have somebody who probably invests for the long term, Krishna Sanghvi, CIO, Equities, Mahindra Manulife Investment Johnson, right now on the show. Krishna, good having you in our studios. Thanks for taking the time out. I hope all is well. And do you reckon that the excitement, at least to us, is palpable? Do you reckon that there is enough case for this excitement, or would you believe that longer term trends are much better to focus on?
Yeah, sure, Niraj. Thanks for having me. And no, I guess anybody who's been in this market for last 20 odd years or maybe 25 years, I think the excitement is palpable, and it's possibly, we've been born through it, having seen 2004 and 2009, extreme events of a circuit down and circuit up. So if you've gone through that, obviously the election actually becomes, something which is more of excitement rather than something which is relevant from a time perspective. So time perspective is very simple. 2004, Nifty would have been wherever it was, and today we are at nearly 7x, 8x of Nifty. Market cap creation would have been far more. So I think that economic journey is honestly far more critical on a longer term time frame. But yeah, we all need some, some data point to get interested on a shorter end cycle, and maybe election gives us this opportunity maybe every 5 years in India. So if you go to 2004, honestly, we had a circuit down, right? And 2009 circuit up, and those two memories can never go away from an average memory recall is always going to be there. Okay, that election can create those extreme events. Yeah, and that's where we are for last 40 days been going through this.
Interestingly, as you pointed out, that the last 40 days, while there have been a lot of ebbs and flows per se, point to point, it's not been a very major market moving period. It has been a market moving period, but point to point, not so much.
Yeah, you're right. I mean, you look at, let's say, 18th April as a so-called relevant date, which means that 19th April Indian election started. And for all this discussion about election and opinion poll, etc., we are around 2% up from the day of 18th April, and maybe global markets are up nearly 4%. I'm using S&P 500 as a so-called most appropriate benchmark. Now, when you look at it this way, Indian markets are connected to the global markets as much as Indian economy is connected to global economy. The relevance can change at various points of time, but the macro picture of India being a subset of global economy and Indian markets being a subset of global risk appetite, global sentiments, I think that can't go away, irrespective of elections.
Point well noted. Okay. Do you believe, one more question here, do you believe that I mean, again, since we have to use benchmarks, I'm using the tally that the incumbent party got in 2019 as the benchmark, purely the incumbent party. And do you believe a 10% vote count, either direction, is a market moving event?
Yeah, honestly speaking, it's tough to predict when there are 97 crore people, likely to vote, as in eligible to vote, and we don't even know how many actually ends up voting, right?
Yeah.
That's why the debate about voter turnout. So it's just not really something relevant as far as,
But will it move the market, Krishna, you reckon? For the short term, do you think that 10% swing either way could actually either derate the market temporarily or give a further upswing to the market as well?
It's really tough. So if as I said, go back to history, 2004, 2009 kind of examples, you have history. And is the same history you use for a 20-year cycle or a 10-year cycle on investment front? Answer is no.
Sure, okay.
So, India's economic journey and maybe the market acceptance and, wealth creation part, honestly, is far bigger of potential than worrying about something, as you said clearly, just a 3-day more event,
Got
it. Maybe, somewhere on 4th June by 12 noon or so, whatever, time, broadly, all these debates might be addressed,
will most certainly be addressed. Okay, let's try and talk about more predictable things. Have you guys been sitting on cash to deploy at lower levels because of the valuation risk and the event risk, of course, that comes in, but since the last 1-2 months or whatever it is, have you been doing that?
So I think broadly, over time we realize that equity as an asset class is going to create value. From asset allocation perspective, either the wealth manager or the investor himself have done their own bit of asset allocation. So my guess is, maximum cash of 3-5% range is is in a way the upper limit based on the type of the fund. So if it's a small cap, I'll be more towards maybe 5-6%. If it's a large cap oriented, will be much lesser. The idea is to generate alpha through stock selection, etc. So I have average cash. Even if I go back to maybe last 4-year history, and unfortunately, we had this period of COVID, which perhaps was a very exceptional event, and I can say that even in that